Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello, welcome to the daily FPA Forex technical research. Today we will talk about the Great British Pound, because we have discussed it in details in weekly analysis on the ForexPeaceArmy.com. So let's take a look what has happened during the previous trading session. Just to remind you, I have to say that this area in general, the strong weekly Fibonacci support is right here. So and here we can see currently the bullish divergence pattern, although the MACD hasn't quite crossed to the upside. Current trend is bearish, but in general we see that this lower low market has formed lower lows, but this MACD doesn't confirm that. And as you know, guys, I do not like very much the bullish and bearish divergences, because for me it's not a very reliable signal. But when it has formed in the area of strong support, this quite another tune. So this is sign of some confirmation of the support on the market. Also take a look on this ABC tab pattern. Market has reached 618 expansion from this ABC and turns to some retracement to the upside. Also, by the way, this area is 1618 expansion from the intraday ABC pattern. Anyway, market currently is the area of support. Also in this area is the weekly pivot support 1 from the previous week. Now, yes, the market was trying to pass through the weekly pivot point but failed. But today market has shown some strong thrust on the intraday charts and move above the weekly pivot point. When market corrects on the long-term bearish trend, very often it corrects to the weekly pivot resistance 1. Look at this retracement on the bear trend. For example, market hit weekly pivot point and corrects to the weekly pivot resistance 1. During the next week, market tests the weekly pivot point and corrects to the weekly pivot resistance 1, then collapsed. So this could happen again. Market move above the weekly pivot point, and the next area of nearest target of the possible move to the upside is this target 155.32, weekly pivot resistance 1. Also take a look. This is the daily confluence resistance 155.27, 155.58. It's right here. The next strong area of resistance is right here. Is another confluence 156.88, 156.97. Well, on the New Year's Eve holiday, it's very thin market. It's time for vacations, so possibly market will not show the strong moves in one or other direction. So possibly we can't count on some solid moves on the market. But still, this area could be, I think, that could be reached by the market in the nearest in the current week. Well, for the more details, let's shift to the hourly chart. Here's the first hour chart. We can see intraday ABC bottom pattern. Market has hit 618 and accelerates to the 100% expansion. It's right here in agreement with the first Fibonacci resistance around 154.58. Currently, market just turns to the some retracement and moves. What the most important, the market has moved above the weekly pivot points right here, 154.39. Also, the fact that market has accelerated from the 618 to 100% expansion very often leads market to the next target 1618 expansion from this ABC bottom pattern. That's around 155.26. It coincides with the daily confluence resistance and weekly pivot resistance 1. This is the next target of the possible move. Before this move, I expect that market should show some retracement to the downside. Also, you can see that hourly trend clearly bullish. So, if you are still trading before the holidays, well, you can use the retracement from this swing to possess yourself on the long side of the market with the target at least this area of resistance. One thing that you do not want to see is if market will return back below the weekly pivot point and will stay there. This is very unwelcome if you are intend to possess yourself on the long side of the market. Also, be aware of the fast return below the weekly pivot point. If it will be some gradual move on the 5-minute chart, on the 15-minute chart to some support on the market, that's fine. This could be possibly just a retracement, but if market will show some thrust to the downside, if it will be some sign of the impulse move, this means that something wrong. It means that market doesn't intend to move higher. On the next hourly chart, you can see the same picture, but a bit enlarged to see the last recent swing to the upside. It's right here. What we see here? First of all, look at this red line, this MACD predictor, hourly trend that shows us hourly trend, and we can see that hourly trend will remain bullish until 154.22 area, till that area. Also, you can see that this is the first 382 Fibonacci support from this low to this high. The next support is right here, 154.3. So one of the possible tactics of entering on the market, like Judd Napoli calls it, is the bushes. It means that you can enter on the first Fibonacci support area with the stops just below the second, just below the 618 support. Well, I think that this tactic is absolutely reasonable in current circumstances, because if market will break this first support to the downside, it means a couple of things. First of all, market will return below the weekly pivot point. That's the first. Also, it will erase the previous highs. So currently it will be the support, and if market will break it to the downside, it will mean that market may be just calling or will stay in the range, or these signs of weakness. Also, if market will break this area, it will lead to shifting of the trend to bearish. Hourly trend will shift to bearish. So the placing stops just below the 618 Fibonacci support from the recent swing is absolutely reasonable. If you are right and market will hold there, your target is 155.26 area roughly. So risk reward ratio, as you can see, is very impressive. If you are wrong, well, you lost about the 30, maybe 50 pips. That's absolutely reasonable risk, I suppose. So that could be the tactic for the possible today trading session. Just keep your risk reasonable and keep in mind that current market is very thin, so don't risk much.